Thank you, Denny, and welcome back to the Retire Young radio show. I am your host, Joshua David, having a great time talking about financial markets and helping us in Minnesota, in the Minneapolis area with that financial literacy. So, Al, as we were talking about in that last segment, with the opportunities that we're seeing in these markets, the uncertainty in these financial markets it's uncertain because people don't know what to do. They feel a little bit out of control.
Mm-hmm.
And there's some common mistakes that we'll say the novice investors make. Now, let's talk about that. What are some of those mistakes they make? But there's different ways you can minimize them. Let's talk about that.
Right, and that's probably the most important thing, is really eliminating those errors, and that becomes part of a strategy, part of a plan that you have that where you follow a strategy that really addresses those issues. These are some of them that we see. Everybody knows, by the way, Josh, that you're supposed to buy low and sell high.
That's
right?
what everybody says.
Everybody says that, but as human beings, typically the novice trader, the public, does exactly the opposite. And this is what they do. They buy high with the hope that something's going to go higher. They sell low with the hope that something's going to go lower. And the reason that happens is two reasons. Number one, they trade with emotions, which you really have to control. That's part of a plan. And also, they don't know how to identify proper entry and exit positions.
Cool.
The great thing for us is that actually that work has already been done. Most of the work has been done. All we have to do is identify who's done the work and then follow what they do. That happens to be Wall Street, the big players, the smart money, Goldman Sachs, J.P. Morgan, Warren Buffett. And what they do is they have enough clout, enough financial clout to actually move price. And that's the key. An entry, any investment that you're making, the entry should be where the best profit potential is and the best probability of reaching that profit potential is. That almost always happens at or near the turn in price. So that means that you need to be able to identify with a high degree of accuracy when those turns in price takes place. And that happens where supply and demand's out of balance. That's buyers and sellers in the financial market. Supply and demand is really what controls or impacts every financial situation, every financial transaction. More demand for something, price goes up. More supply, price goes down.
A good example is the housing market. If there's a lot of demand for homes right now, so what is happening to homes? Prices increasing. They're skyrocketing. The same thing in the financial markets. When there's so many buyers, price is going to go up. But when there's so many sellers, more sellers than buyers, price will go down.
Right. Well, when you think about 80% of the trades are controlled by the institutions, and those guys have hundreds of millions of dollars that they have access to trade. So they can do it with enough clout, enough impact on the supply and demand to move price. So what we want to do is have a strategy that helps to identify where they're doing that. That gets you to the point where you can now buy low and sell high. And then you actually hit on one of the things before. You said wait till price comes to you. What most people do is they overtrade. They think it's a numbers game, a quantity game. It's not. It's a quality game. What we want to do is not overtrade, and that's what we find a lot of people do. They overtrade, and then they also sell their winners too soon because they don't know how to identify a realistic profit area.
Yeah, and just to give examples of that, you were talking about the emotions, and when the typical investor, the average investor, gets into a position, they're looking at earnings, good management, price trending up, things looking really good with whatever they're looking to buy or sell, buy.
Mm-hmm.
Now, by the time all that has happened, price is already high. So that's why they're buying high with that hope to buy, sell higher.
Correct.
And that's the problem. And you have to have the proper turns in price. And it's all about supply and demand, where those institutions, like you were talking about, Al, where they're buying, but also where they're selling to have low risk, high reward, high probability entry points into these markets. And in these investing classes that you teach, Al, you talk a lot about, you mentioned, and we both mentioned, to how to time the market by letting price come to you rather than chasing price. I mean, think of it as, if anybody's looking to buy a home, nobody is going to chase price and buy or purchase a home for more than what it's worth. So that's the same thing you want to do in these financial markets is really buy low and sell high. Al, I mentioned this step-by-step rules-based strategy. Now, that is important for any investor, but there's assets other than the stock market that you can utilize with buying power,
correct,
but also with multiple hours per day to trade and invest, because the stock market, everybody knows that it's only open 6.5 hours per day here in Minneapolis, right?
Correct.
From 8:30 till 3. So let's talk about those other assets and those other opportunities we have with buying power.
Yeah, there's two parts, I think, to any investment strategy. One is a basic foundational strategy that you use that is going to be the timing part of it to identify the entry and exit positions. And the second one is the asset that you use. There are different assets that are available to all of us, actually, that happen to be the same ones used by the institutions, but not necessarily taught to you or talked to you about by a financial advisor. I think this is kind of ironic, Josh. If you think about it, if your portfolio and what happens to your financial situation is so important to Wall Street, why are you in different assets and different strategies? Why do they trade frequently, probably daily in many cases, but certainly frequently, but they put you into a long-term, multi-decade type portfolio? Why do they use not just stock, but why do they use futures, the foreign exchange market, options market, but they put you into mutual funds or annuities and maybe some stock?
Al, I just want to, hopefully you can lighten that up a little bit. It's kind of sad for a lot of people because that's what's happening, but it's unfortunate.
Well, yeah, but the good news is that they can use these same things.
There you go.
You just have to have the proper education. It's the knowledge. I mean, people, when we talk about futures and Forex and options, if you haven't used them before, it's like anything else that you haven't used, you don't know anything about. There's a little bit of fear there, a little trepidation about getting into something that you don't know anything about. So education becomes really important. It really, once you understand how these assets work and how the market functions and how they can be used, then it becomes just as easy as buying stock or buying mutual fund.
And not saying it's easy. I mean, there is risk in this, but we want to keep it simple.
Yeah. Well, I'm glad you mentioned risk, because that's another one of the errors that people make, is not knowing how to protect what they have. Risk management is the number one thing to learn, no matter what you're trading, what you're investing in. And that's what we teach. It's not just being diversified, which is what Wall Street will tell you is going to be your protection, because they have you diversified. In other words, spread out maybe with 10 or 20 or 30 different stocks, or 5 or 10 or 15 different mutual funds. The problem there is that they're all in the same asset area, the same stock. They're all in stock in the equity market. Correlation during a crash or a correction becomes very strong, so they all pretty much go down together. Even though there are good companies that shouldn't be hit, it's just kind of like in sympathy, they all take a hit.
Yeah, so let's talk about those other assets. What are the futures market? What is the Forex market? How can we utilize those with that stock market?
Yeah, and there's a number of advantages to using those. If you are looking for additional assets now, additional cash now, then you can't use a long-term strategy to do that. The assets that you just mentioned, Josh, futures and Forex and options, can be used as short-term trading vehicles. Futures probably the shortest. A lot of people that trade futures are in and out of trades sometimes within the day.
Can you hold them longer, though?
Can, absolutely.
Okay, so you can dictate your strategy then.
Well, yeah, because what you're looking at the proper entry point and then a target, the proper target. And do you care if you hit that target in an hour or 2 days or so? It's just, the goal is to hit a proper target.
So it's not based on time, it's based on price.
Exactly. Okay. Exactly. The goal is to have a high probability trade. In other words, something that has the odds are in the favor of it being successful, and then also with a high profit potential. I mean, if you're investing money and you only have a profit of a penny, if that's the only potential, that's probably not a good trade. You want to go onto something that has a little greater potential. But where most people have a problem is in identifying that proper profit target. Now, the futures market, that's where you're looking at what the value of something will be in the future. You're just doing a contract. It can be on the major stock markets, all the U.S. markets, the Dow, the NASDAQ, the S&P, Russell, some foreign markets, commodities, corn, sugar, soybeans. You always mention, what's the one you always mention, Josh?
Lean hogs.
Lean hogs.
That's my favorite.
You got something about lean hogs.
And, I know, and orange juice, just like the movie Trading Places.
Yeah, exactly. If you've seen that movie, you know how crazy that market can be, but how beneficial it can be if you know what you're doing.
You're right. So, Al, we're kind of taking a lot of information and putting it into these short segments here in the program. And we have a lot of listeners that want to learn more about the futures market, learn more about the Forex market, which we'll get into in the next segment. We kind of ran out of time here. But this whole buy at wholesale and sell at retail concept is what we do in our everyday life. We want to buy something cheap, and sell it at a retail price. Well, that's exactly how you want to do things in the financial markets. So, Al, coming up in this next segment, we have a lot of listeners that are preparing for retirement and want more control of their assets. They don't want to have somebody that they may not even know managing their future, right? Now, think about that. Not their money, their future. So let's talk about that. Let's talk about those retirement accounts and different techniques and different strategies that we can use. This is Josh and Al with the Retire Young radio show. We'll be right back.